On the last trading session of Friday, gold spot printed a closing price little above $1,787 per ounce. The numbers rounded, the market is closed, and the last week gold traded as low as $1,782 per ounce and as high as $1,830 per ounce. Numbers rounded, the market is closed. Now, gold again is trading below its all-day simple moving averages, and it's worth noting that the short-term moving averages are trading below the long-term moving averages, the 100 days and the 200 days daily simple moving average, which is a negative sign. RSI readings are moderate on the weekly and the daily and the monthly chart. The supports are seen at 1782, broken the 1770, then 1750, and the resistance levels is 1797. This is highly important. If we can clear from there, then 1818, then 1833, and the pivot on the weekly chart is 1799 and 1792. Expect the price to try to reach to that level. That's all for the technical side. We are going to move now to the economic calendar. On the economic calendar for the coming week from the United States, we are waiting on Tuesday for the core CPI and for the retail sales on Friday, and also the Philly Fed Manufacturing Index as well on a Friday. Those two headers, the core CPI and retail sales, highly important. That's all. Moving out to the trading strategy. Hi again, it's always nice to meet you in a new episode of our Gold Price Weekly Forecast Gold Today. If you are new here, just let me guide you through how this works. We are going to start with examining the chart of the US dollar, then we will move on to the chart of gold, and also if there are some news or important news are there in the market, we are going to put some light on it. So starting with the US dollar chart. Now, the US dollar is actually confusing, and the chart of the US dollar it has like two setups. If you look at the long-term charts, the weekly, the monthly, you will see that the chart of the US dollar is very nice. It's something like it's want to break out. But if you look at the small charts, like 4 hours chart, you will see a head and shoulder with a potential of fall to 91.5. So you would take the risk and say that the US dollar could have little to the upside up to 93, and then I expect that the US dollar is going to come down to continue its correction, which was confirmed last week with a close below 92.50, as I mentioned in my last video on the last week. If you have watched that video, because I said below 92.50, this means the US dollar entered a correction phase, and it has to go all the way down up to 88.6, at least up to 90 or 91. Moving on to the to the gold chart. Now, gold chart itself, it's not that much amusing. I talked about this note on the last video, and I said the chart itself, it's bearish. Without what is happening in the US dollar, the chart of gold, it's not looking nice. This is not an asset that wants to rally. This is an asset that it's in consolidation, prolonged consolidation. It has built so many bearish setups, which is, as you see, as pointed, it's like a bearish even evening stars, which is usually it tells you that the trend is mature to the upside and you're going to go to the downside. Then the other day comes piece of news and it turn the market to the other side. This is what we have been experiencing in the last few weeks with gold. So however, at least gold has to do a reset, has to visit 1770 or 1750 major support, and there it could be like a great buy. So what we will do with this information now, let's make some conclusion. I do believe that gold, this is like a piece of financial like knowledge. Gold is correlated to the stocks market. Now, the stocks markets have been experiencing some struggles. On the last week, we have seen like 5 days of losing sessions on the US equities, and this why gold did not actually perform. I do expect that the stocks are going to rebound this week, at least partially. They are going to take back some of their losses. So if this takes place, I think gold is going to follow suit, but up to 1817, no more than that. Yeah, max to max 1823. Gold is a buy at 1782, then add at 1776, 1766, and 1750 with a stop loss below 1740. You can build a position like this with a target of 1800 to 1823 max to max. Now, on the other side, if gold did what I was expecting or what I am expecting at the moment is to rally up to 1817 or 1823, you can open a sell position at that level with a stop loss above 1835 with a target of 1750. Which one comes first? You go with the setup that happens before the other setup. I cannot tell you. This is only God knows which will happen first. That's all for our video for this week. Thank you guys for watching. See you next week in another video.